There's countless ways to approach the markets and to build a strategy and to extract money. So I'm going to show you a strategy I used over the past 3 to 4 months to essentially just milk money from euro dollar. It was so easy. All I did was click sell. And no, I'm not joking. So for any of my longer term subscribers, you will remember during this period in sort of the end of August, the start of September, I posted a YouTube video saying I was going to start shorting the euro US dollar. So I had already built up a macroeconomic direction or bias. Now, before you click off the video, all the technical guys, don't worry. What I'm showing you is more based on trend and momentum. My macro factor was just a huge confluence for me, but this can be done without macroeconomics. You can take the monthly, weekly trend, daily trend, and then apply it. So what we've got here on the daily time frame is very clearly a double top here. Now, again, I was bearish, so I may have caught this a little bit earlier than the technical guys because obviously there wasn't really many technical confluences here to suggest a downtrend just yet. But I was already looking to go short. So I saw we had a really nice resistance here. We formed a double top. Price didn't manage to make a new high, indicating to me we might start heading a bit further down now. So what I'm going to do is just play through. We're going to wait for the break, which we've just had, look for the retest, which we kind of had here. This was very kind of useless or, very small, but it's okay. We'll use it. So we've got this. So we know our daily levels. Let's just mark out here as well. So let's just say we've got a support through here. This is somewhere we can pay attention to in the future. We're just going to mark out potential levels that we can start taking profits at, or that we can use for take profits. So we've got our levels drawn up here. Nothing complex. This is very easy, very straightforward. So we're going to go down onto the 30-minute time frame. Now, this is where the indicators come in. This is where they're very important. So what I'm using is a Bollinger Band. So we've got a length of 20 and the EMA. I'm fairly sure this is a standard setting, so you don't need to play around with it too much. The RSI, however, is custom. So the length is 6. The upper band is 80 and the lower band is 20. Now that's important. So these settings for the RSI are important because it gives us the most extreme levels in the market. It tells us when the market actually is overbought or actually is oversold, obviously relative to previous price levels. So we've broken out of this daily support. Now the first thing I see here is a very impulsive bearish candle right here. I'm actually just going to delete this level so we can focus on lower time frame for now. I am a trader who is very much in the mindset that these candles get corrected and filled. These are called, aggressive candles, impulsive candles. I think ICT guys even call them FVGs. Whatever you want to call it, I don't care. It all does the same thing. So I would expect this to get filled at some point, but I'm not going to let that sway the way I approach the trade at all. Now, the reason is because this is dollar cost averaging. So I'm going to walk you through what that really means and what I look for. So when I'm dollar cost averaging, I'm looking to follow the overall trend. I'm looking also to find extreme overbought or oversold situations on the lower time frame to then let me get into that higher time frame trend. So I'm looking for the 30-minute to become overbought at some point. It might do on the RSI. And that way we can sell on the lower time frame, having confidence that the higher time frame's with us and we've caught the best possible entry. Okay, so this would have been a perfect example. Now, of course, this is replay mode. Again, I did trade this live. I've done all of these trades in real time. You can go and vet my channel, do whatever you want. I've been very, very vocal about the way I was trading. So I'm happy to obviously cut back. If you've got a problem with that, I'll see you later. But I would short here. So the reason is because we've got the RSI overbought. We've come up and pushed up this Bollinger Band, telling me that this market is now overbought. Now, when I say overbought, I don't mean it's ran up 100 pips or ran up 1,000 pips. I mean, it clearly hasn't. But this is just the condition that we're looking at. These are just the confluences. Now, again, I am macro bearish or economically bearish. The higher time frame trend is bearish, so I'm happy to go short. Now, there are rules to this. Now, the reason most retail traders shame this strategy, most people hate it. They don't like dollar cost averaging because it's viewed as gambling, and trading is gambling. But dollar cost averaging, for some reason, is really looked down upon. Now, I kind of get why, because there is no stop loss, there's no take profit really, and you can add into losers, and generally the retail masses hate that idea, like too risky, whatever. Now, I think that's bollocks because You can sell and you can sell and you can sell and you can sell. All you need to do is manage risk. So the general rule I follow when dollar cost averaging is use 0.01 lots per $1,000 in your account. So if you've got $5,000, you would use a 0.05. If you've got $10,000, you use a 0.1, so on and so on. Now, of course, this is obviously replay mode, so I don't have a capital balance here, but we'll sort of ignore that for now. There are other rules. So, for example, the rule I have is I don't exceed more than 5% drawdown at any one time, or sorry, within any one position. So if I have 3 positions on here, I reach 5% drawdown, I'm going to close out the biggest losing position, and that frees up some equity, it frees up some margin, so I can scale in again at a better price. So you've got a rough idea now. Now, in terms of entries, again, we're looking for simple levels of market structure that price could react from. We're looking for a slightly overbought situation, obviously, because we're looking to sell, we want it overbought. If you're looking to buy, you want it oversold. So very simple stuff. So we're pushing up the Bollinger, the RSI is overbought, so we've gone short. Now, we're just going to play through. Actually, we would have had an exit there, but that's okay. We'll wait. So actually here we could exit, and the reason is because we're coming into the bottom of this Bollinger. We've got a support level here, so you know, if you want to take a quick trade, it's $200 banked, no problem there. So just trading support resistance using some indicators as confluence. So again, we're going to play through and just wait for the opposite, wait for the same signal again. So I actually could have entered again there, but unfortunately I missed it. I was a bit too quick on the fast forward button. Here, I'm going to sell the market again. So just as I said before, we've come into a bit of a level here, nothing too major, nothing too serious. So I'm going to click sell. Now, with dollar cost averaging, you actually want to have drawdown. I want to have drawdown here so I can scale in, because as you just saw, we took a position, $190 isn't enough. So what you want to do is obviously make sure the money you're getting from a trade is worth the risk that you will be taking in the future. Because you're not trading a 1-to-1 R&R or 1-to-2 R&R, you can't see where you don't have a stop loss, you don't really have a take profit. So it's very hard to gauge what your return actually is or will be. But what you want to do is make sure this $190, sure, you know, that's cool, it's great to get $190, but that's not going to cover the next drawdown I have. So if I need to realize a loss on, let's just say this trade, for example, that $190 is gone. Sure, it's a nice little buffer, but it's not keeping a good risk to reward. So just keep that in mind. So it's good. You could take lots of frequent positions like this and scale up and collect or accumulate pips. But that is another way to go about it. That's something I do now and again. So again, we're just going to play through and just see how this goes. Now we could take profits here. So we've got an oversold RSI, come down to the bottom of the Bollinger. But you know what I'm going to do in this situation? Because the daily trend's bearish, because my economic bias is bearish, I'm just going to let this run. I'm going to look to scale into this trade as we go. So again, I'm just waiting for another overbought situation so I can sell the market again. I'm going to sell it here. Now, this is a little bit of a rough area to sell. It's not perfect, but it's okay. So you might have noticed, actually, when I sold it then, this came down. And this is what we call, obviously, your first position is your entry. When you start adding more positions, you would then change that to your average price. So you wouldn't say my entry's at, 103, whatever. You can say that, obviously no rule against it, but you would more refer to this now as my average price. So this is the average level between the first position and the second position. So if price goes above this level now, you're in drawdown. If it comes back down, you're now in profit, or sorry, a break even to profit. Now, the reason this is important is because managing your average price is very, very important when dollar cost averaging. So if, let's say, we're in a huge drawdown, what can you do to get out? Well, you need to bring that average price up. So that way the market needs to move down less for you to get out either in profit or break even. So the way you can move your average price is closing out lower or higher positions, closing out the furthest positions away, or scaling into a position at other or closer prices to the market. So that brings up or down the average price, and that again makes it easier for you to get out of the market. So again, we'll play through and we'll see. So here I'm going to take profits. It's almost $900 done. So we've just made $1,000, and all we've done is click sell. No big deal there. So let's just again play through. Now this can be done. This strategy can be traded on all sorts of different time frames. The concept is very similar. So I'm actually in one currently. I'm not going to show you right now. Maybe I'll show you at the end of the video if I remember. But I'm doing a very similar thing on Euro Australian dollar, actually on the daily and weekly time frame. So that's a slightly different approach, but it's the same concept. So again, I will show you that one later in the video if you stick around. So again, we're looking at the RSI oversold. We pushed up the Bollinger. I didn't actually check for a level. There is a slight level here, nothing too major as you can see. No big deal there. But we'll play through again, and there we go. Another through. Actually, you know what? I'm not going to close it. I'm going to leave it. Let's just see if we can get a bit more profit out of the market. Now, again, the reason I'm happy to do this is because I am very confident in this strategy. I've been trading it for a long time, and I do macroeconomic research. So I'm very bearish on this market. So again, you can do it however you want. I'm just walking you through my thought process during this period. So I'm actually going to sell it again. It's very near the initial entry, but the criteria has been filled. As I said at the start of the video, I like to see these aggressive sort of impulsive candles get filled, which has happened. We pushed up the Bollinger, the RSI is overbought. So the criteria has been met again. So I'm just going to scale in. And obviously this is all up to discretion. If you don't want to scale in right near your first entry, that's completely understandable. But for this example, I'm happy to do it. So again, we'll keep playing through and we'll just wait to see if we can get either another entry or we can take profits. We'll see. Not looking. Okay, now I'll take profits here. $800. Bang. Done. No problem at all. Easy stuff. So again, we do the same thing over and over and over. We just wait for another situation. I actually should have sold here. You know what? I'll sell it here. It's a little bit of a late entry, but you know, that happens sometimes in trading. You can't always be right on the mark. And because we're coming into, remember, the start of the video, we marked up this daily level. I'm closing out here. So now I'm just going to sit and I'm going to wait. I want to see how the market reacts around this level. I don't want to get in just yet. I'm actually going to go to the H4. I'm just going to watch and see, does the market break or does it continue down? So we will see, and that will be another confluence to get into a trade. So it broken down very quickly. I mean, we didn't really see anything there. Actually, let's just see, is this a break and a retest or is this a reversal? Obviously, I know it's not a reversal, but just for this example, see, we could have been stuck in this on the 30-minute. This is why it's important. Obviously, on the 30-minute, this is the H4. If you were stuck in this on the 30-minute, it could have been a little bit more nasty. But I'm going to start looking to sell this market now. I'm just going to wait. Actually, you know, I might sell it here. I quite like this. Got a little bit of a resistance here. Previous high, previous low. We're currently rejecting this one a little bit, so I'm going to sell. Just go in and see what happens. So we've sold. Let's just play through. If we get some drawdown, again, drawdown is appreciated on this strategy because we can do that, bringing our average price up, scaling in, and we can make more money on the ride down. So let's just wait, be patient, have discipline, and again, if we can see another place to enter, happily do that. It's not really enough. Remember, we want to be able to cover the next drawdown. If we have one, we need to be thinking about capital preservation, not just growth. So let's just wait. I'm actually going to take this. This is $400 in the bag, no problem. And we come back into this level of support. So again, just wait and see what happens here. Beautifully overbought market. I'll sell again. Remember what I said about these aggressive candles. Nice to see those get corrected and filled. So let's just, again, continue the brigade of selling. Sell. There we go. That's another, what, $400 in the bag. So hopefully you've got the idea. Now, again, I portrayed it very, very easily in this market. This is a very, very simple way of doing it. But this was all real. I was doing this real time. You know, I was calling it in my Discord. By the way, you can get access to that completely free in the description. I was doing this on live streams. I was doing this on YouTube videos. I did this in real life on real markets. So you can go and verify that if you want to. Now, the real now current example I'm going to show you is on Euro AUD. So you can see here, this is actually a higher time frame trade I'm looking at on the daily. So it's the same thing, pushed out this Bollinger. Now this Bollinger is slightly different. The setting is actually at 200 Bollinger Band because we're using a higher time frame. The RSI, excuse me, the RSI is overbought. We're coming into, you know, we've broken out above the previous high. We're now within this wick. So I'm anticipating a pretty strong downside move at some point. But, you know, When will we get it? I don't know. I'm sitting tight. You can see I've got 6 lots on here at the moment. 2, 4, 6, yeah, 6 lots. So, you know, it's a game of patience. It's a game of discipline. You need to be able to manage your risk. You need to be able to be sensible. You cannot trade like this with your whole account on the line and just hoping it works. So again, please go and back test this. Find a way that works for you. For me, this is the most profitable strategy I've actually ever come across. But again, that's because I mastered it, I backtested it, I know the rules I follow. And again, if you want to learn this exact strategy, I teach in my Discord. I've got full PDF breaking down every detail. I've got case studies in there. I even tell people in my Discord when I'm taking these trades so they can follow along if they want to. So guys, have a good one. I hope someone's found this useful out there. Remember, if you don't like the strategy, that's fine. I don't force you, but don't be a hater. Just stick on your own path. I will see you very soon.